the Asian markets, which are now trading in the green. No big move in many of them.
The government has accepted Kirit Parikh committee recommendations.
Unless we see a big negative daily close, the trend for now remains higher.
The numbers look good. The total global sales for Tata Motors in Q4 has risen 8% year-on-year.
Pipe natural gas for domestic users and compressed natural gas for transport sectors.
So decent opening, you'd have to say. No big bang opening, just building onto its gains in a slow and steady way.
Growth indicators seem to be suggesting some bit of a slowdown, at least.
We were also seeing macro bottom out.
Titan's business has grown by 23% on a base of 1.3%.
This morning, things are on the quieter side. The Nifty is trading in a range of just about 50 to 60 points. This is going to be one of the trickiest quarters to lay out expectations, considering that we are in a heightened period of uncertainty.
The markets are concerned slightly of the highs of the day, but still sitting with gains. That is, the Nifty is up 60 points right now.
That was the day so far. Hello and welcome to Closing Bell from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar, and with me I've got Nigel D'Souza, who's up in the newsroom. Hi Nigel, afternoon. The commentary till about 1:30, 2 p.m. was that things were very, very quiet.
Yes.
It's a buy on dips market. We're holding up. No great gains, no big gains, but at least we're managing to hold up and retain all of last week's gains. But the sudden slide that's taking place in the markets in the last 1 hour has come in as a bit of a surprise. The Nifty slipped close to about 100 points from the day's high. The high today was closer to 17,700, and now look at the slide that's taken place in the last 1.5 hours. The Nifty is down to 17,600, so this has come in as a bit of a surprise. The banks are giving way. The Nifty banking index is down 260 points. Remember, the Nifty banking index had rallied for 6 straight sessions. And now some of that profits, some of those gains are being unwound, and we are seeing Nifty Bank come in for some amount of selling pressure. To quickly run you through some of the big losers and gainers in today's trade. On the way down, you've got weakness in Bajaj Finance, IndusInd Bank, SBI Life, ICICI Bank. So a lot of the financial sector names are cracking in trade. Look at IndusInd Bank, and you would see a sharp slide in that name. You also have State Bank of India, another one that I was talking about, and HDFC Bank, and big boy Reliance Industries too has come for some heavy selling pressure in the last 1 hour. On the gaining side, ONGC is going strong. Tata Motors is still the top Nifty gainer. You've also got strength in Wipro, Power Grid, Hindalco. These are a couple of the big movers. But sharp fall, Nigel, in the last 1 hour.
Well, that's right, Reema. I'm looking at the Nifty Bank. That's the big underperformer today. And it's down close to around 250 points as we speak. It was as is low, and the last 10-15 minutes or so, it's taken a leg down. Now, crucial that the Nifty Bank holds on to the 50 DMA, which comes in at around 40,650. So just keep an eye out on that mark. On the Nifty, what is clear, and the point that we made earlier today as well, was 17,700, 17,800. That's the upper band of the range. And, that is likely to be a bit of a resistance zone. We almost went till there, and from there we saw a bit of a U-turn. I'm looking at the options data, 17,600 put, 17,700 call. Both of them are getting written in today's trading session. So aggressive writing is what we're seeing at either end, which brings us to the range. The near-term range on the Nifty, you wanted to hold the 50 DMA, which is at around 17,522. And on the upside, the tighter ranges, today's high, closer to around 17,700. The bears are coming to fight out there. But on the Nifty Bank, I think for the last hour, the crucial number is the 50 DMA, which comes in at 40,650. You need to hold on to that on a closing basis. But otherwise, you pretty much say that the uptrend is intact as long as this 17,200, 17,500 odd level on the Nifty holds out, Reema.
Okay, let's tell our viewers what we have ahead in the next 1 hour today. Tata Motors and Maruti are in focus on the back of fresh brokerage notes. Key highlights from the reports lined up. Realty stocks, Godrej Properties, Shobha Developers are surging in trade after the companies reported strong Q4 business updates. Complete details coming up. We'll also discuss market and stock-specific action with Pashupati Advani of Global Foray. All this and much more in the next 60 minutes. But how should you position yourself in the last hour of trade? Mitesh Thakkar is back with us with a few closing strategies. Mitesh, is it time to take a U-turn? In the morning, you were telling us buy the dips. Are you buying the Nifty at 17,600, or are you reversing the strategy?
Good afternoon. One, I think, the overall trend and the bias remains on the upside. Why I was, suggesting to buy into dips and not, the higher levels was of two reasons. One, I think there are some weekly averages around the 17,650 zone. And in the last 5-6 sessions, today being the sixth session, in the last 5 sessions, we have had a rally from 16,900 odd levels to as high as about 17,650 odd levels. So roughly about 700, 750 point kind of rally had happened. So once you've had a rally, you are also running into some weekly resistances. There could be a couple of days of consolidation, which is what I think would be a very likely and a strong possibility kind of an outcome. And therefore, you might not want to buy it immediately and buy it closer to the 200 average area, which is about 17,522 today. So on a dip to about, let's say, 17,560, 550 zones, that will be the level when I would want to take a position on the index. But on the long side, because the overall setup and the overall bias is clearly on the positive side. Same approach is what is being reflected in the stock calls as well. We've been having buy calls throughout the day, and I have 2 more to add to the numbers. REC and PFC is something which I've discussed earlier, giving a buy call on REC. I think PFC can be added to the buy list as well. Keep the stop below levels of 161. Look for targets of around 175 on the upside to begin with, and we may even actually look at targets of 180 here. So very positive setup on this. And Bajaj Auto is the other call where I would recommend buying with a stop below 40.25 for targets of around 41.30.
All right, Mitesh, I wanted to ask you on Reddington. The stock had moved well, but then it saw a good correction of close to around 15% from the peak. I think the next level you're looking at is around the 100 DMA, which is at around 177 odd. But it's crossed the other crucial technical levels. Any view on Reddington?
So, Nigel, I think, the stock, I have not been tracking it regularly, but an early look on the charts tell me that, the stock has completed its correction. It made a last swing high around 190 odd levels in January, and then went to as low as about 160, taking about 2.5-3 months kind of time frame. So it was a time-wise as well as price-wise correction. And today, I think some kind of breakout has taken place. Keep today's low as the stop loss, and I think this should again go back to about 190 in the next coming few days. So gives you about a 5.5 point kind of risk to about 15 points profit. And in case the charts improve further, then we can revise the target upwards as well.
All right, Mitesh, thanks a lot for that. We'll keep coming back to you in the next hour or so. But let's focus on a couple of stocks that are moving around then. Godrej Properties and Shobha, both of them are doing well in trade on the back of a strong showing in the fourth quarter numbers. Sonal Bhutra joins us to give us a quick recap of why these stocks are doing well. Sonal.
Thank you so much for that. Yes, a big upgrade, that a big move is what we are seeing in these two stocks in the entire royalty pack, so to say. Let me start with Godrej Properties. Quarter 4 numbers were quite strong. Sales value is up 24.5% on a sequential basis. The volumes are up 19%. Collections are up 127% on a quarter-on-quarter basis. Company has been able to surpass their 10,000 crore booking guidance for FY23, which stands at 12,232 crore rupees. In fact, they go ahead and say that they will have a stronger launch pipeline in the current year than ever before. Additionally, there's a Motilal Oswal upgrade that has come about for Godrej Properties. They have upgraded the stock to a buy from a neutral. They say company reported a 4-fold jump in their bookings till FY22, that is from FY17. This was driven by launches of around 100 million square feet in terms of project additions. Market share expanded to 8% versus 2% earlier. They expect company will be able to deliver 38 million square feet of projects in the next 2 years, and that is the reason they could see a 20% growth in pre-sales to the levels of 20,000 crore rupees by FY26 itself. For Sobha, it was the best ever quarterly sales in the quarter gone by. Bengaluru market, which is the biggest one for them, saw flat growth. NCR saw a dip, but Kerala is the market which saw good growth for the company. Overall, sales value went up by 26%, sales volume was up 8%, realizations went up by 13% for Sobha in quarter 4. And if we look at the geographies, Bengaluru at 0.92 million square feet, NCR at 0.18 million square feet, and Kerala also higher at 0.16 million square feet. They launched their first project in Hyderabad, did a launch of around 3 projects in the quarter gone by, and the commentary is bullish as well. This is added on to by the fact that RBI did not hike rates in Thursday's policy meet, and that is something which is giving a breather to all the real estate stocks, and that sector is in focus today.
Thank you very much, Sonal. Indeed, look at the up moves in names like DLF. DLF has gained 6% in trade. Purvankara up 4%, Brigade up 3%, Macrotech developers. So all these real estate companies are buzzing in trade today. But Sonia is here with me now in the studio. Hi, Sonia.
Hi, clearly people are buying more homes, right? I mean, you can see it in the stock prices. But for the market, I think it's very, very quiet, as you guys have also been pointing out. I think the market has just gone into long weekend mode, well ahead of the long weekend.
I don't think it can afford to. There are so many cues to track this week. You know, we've got CPI print coming out of US and India. We've been talking about the slew of IT earnings. You've got global earnings like JP Morgan, Citi, and those will be important, right? In light of what's happening, banking. You've got Fed minutes. So I don't think we can get into a lull and dull period just yet, but enjoy the calm right now.
Before the storm. No, I think in terms of the market headline, right? I mean, it's not moving at all. It's absolutely quiet today. I think stop short of the banks, maybe a little bit here and there, but not too much is moving. So let's get Hemang Jani into the conversation. He's joining in from Motilal Oswal Financial Services. Hemang, this is a market that's sort of slowly and steadily built on to its gains. It's bounced back a bit. It's almost a 4% rally now from the lows that we saw in March. You think that there's more upside to go? And have you like kept your shopping basket ready? Are you looking to accumulate stocks?
Good afternoon, Sonia. I think clearly, in the last about 2 weeks or so, we've seen some up move both in the index and the broader market. And globally also, we think that things have stabilized. And I think a big positive takeaway was from the RBI meet where there was no rate hike. And definitely, I think that is something that would add to the overall comfort. So I think the market would surely want to watch out for the earnings picture and what sort of management commentary are we really looking at. But having seen a major underperformance, a correction, and the fact that overall earnings picture is still looking good, which is basically from the previews, definitely makes us more constructive on the market. And we do think that some of the beaten down sectors like maybe real estate, some of the banks and financial services, the auto companies, and to some extent IT, I think that is where we would definitely be more positive to accumulate from current levels.
Hemang, particularly on real estate this quarter, there was this tax arbitrage, the capital gains, which comes to an end from 1st of April. So do you think real estate companies are going to have a bumper Q4, but then the sales may taper off in Q1? And if that's the case, then are these stocks currently a buy opportunity? Because names like Godrej Properties have zoomed up 8-9% already.
So, Rima, yes, when you compare on a YOY basis, real estate will report something like 168% kind of a growth. But I think if you look at the overall scenario where some of these stocks have underperformed big time, and our interactions with the management of some of these companies, particularly Godrej Property, they are indicating that in the next 2 years, they will be delivering about 38 million square feet of projects. With a focus on profitability. So we think that, when the interest rate hike has paused and with this kind of a growth visibility and the confidence that the management are, sharing, I think it makes sense to, have some exposure to the names like Godrej Property or Lodha or some of the Bangalore-based companies, because we think that this correction is almost over and the overall growth visibility is looking better.
All right, Hemang, a couple of days ago, we had spoken to Mr. Sharma of Bajaj Auto, and I put this question to him: what about the Triumph Bajaj tie-up? When are they going to roll out that first motorbike? He told me start, saving money ASAP. And today they put out on the exchanges that that they have made some progress, and most brokerages now are anticipating that release because they have said that the first launch will be in 2023 itself. How do you view this? Because it will be a positive development for Bajaj Auto. How positive could it be? And also, would it be a bit of a challenger for Royal Enfield? Or do you think they have their niche segment out there? Go ahead.
So, Nigel, I think in terms of rollout before the market consensus expectations, definitely it would be positive. But what we have to understand is that the entire two-wheeler space is going through a bit of a challenge. And the growth numbers have not been that good. Leave aside something like Royal Enfield and maybe Hero Motors, which reported decent numbers this month. Overall, we think that two-wheeler is not the space where you're going to make a good appreciation because of the lackluster numbers that they are throwing. I think the OEM companies, be it Ashok Leyland or Maruti, are the ones where you're going to see a much better growth. So we continue to focus upon that, and we have to remember that auto would be one important sector where the growth for next year is going to be one of the best, along with banking and financial services. So overweight on auto, Ashok Leyland, Maruti are the preferred picks.
Okay, well, Triumph enthusiasts won't have to wait too long. We understand that there's a global launch happening in UK at the end of June, and come July, the Triumph bikes will hit the Indian market. So, won't have to wait too long for it. But of course, pricing is still something that is not known. In fact, the Bajaj Auto stock, has been one of the biggest gainers this year. The stock is up almost, I think, about 12%. For the year, but Nigel, we don't know pricing just yet, but we know timing for sure. So it's July end that the bikes are going to be launched.
He's sitting up and taking notice now.
I've started my recurring deposit. Hopefully, the pricing comes in my favor, then I can go for it. Otherwise, at least there'll be a saving for me.
Okay, let's see. We'll have to, fingers crossed, wait and watch, right? But it's a beauty. That's what I heard. I haven't seen it just yet, but the street is waiting.
Sonia, Sonia, people like me, I mean, we've grown up. The only motorbike that I've ridden ever is a Royal Enfield. Because of pricing, because of parts, because of the power as well. Now, if you're going to bring some competition out there, we'll definitely take notice, because for the last many years, we didn't have really any kind of competition with regard to pricing as well as parts. And parts availability is very, very important, I'll tell you, from a customer point of view. So let's see how that goes. But let's move on.
Absolutely. Parts availability, service, everything. And you've ridden the best one yet, right? So, well, better ones are coming, I hope. But let's do one thing. Let's take a quick break on that note. The market is still very quiet. So when we come back, we will get in Pashupati Advani of Global Foray to talk about how to approach the rest of the day, and lots of big cues. NSE closing bell. For now, the market is still very, very quiet. So let's talk about individual stocks then. In case you missed out on all the action today, the major part of the action was on Tata Motors. So Tata Motors is on our radar as the company reported very strong JLR numbers in the quarter gone by. The wholesale numbers were quite strong as well. So overall global sales numbers went up 8%. Within that, the passenger vehicle numbers went up 10%. But Jaguar Land Rover's numbers were exceptionally good on a quarter-on-quarter basis. It was almost a 20% rise that JLR has seen. Now, Goldman Sachs upgraded Tata Motors to a buy from a neutral to factor in the improving JLR outlook. They also said that the valuations are looking very good compared to Tata Motors' own historical valuations of 9 times. Forward, Goldman Sachs said that Tata Motors is now trading at 7.5 times. So there is some valuation upside as well. BofA Securities said that not only are the volumes good, but there's a free cash flow beat at Jaguar Land Rover as well. And the risk reward is favorable at current levels. So that's on Tata Motors. The other stock in focus is Maruti, because Goldman Sachs has downgraded Maruti to a neutral from a buy. And they have reduced their target price to 8,800 from 11,000 earlier. They say that there is persistent weakness in demand, especially in the small car segment. And the commentary is weak from the management, perhaps because of the supply side issues as well. The dealer checks indicate that the inventory levels in the small car segment are 2 times the normal channel inventory. So that seems to be a bit of a sticky point. Remember, 35% of Maruti's product portfolio comes from the small car segment itself. Not only that, the Urban Cruiser, the S-Cross are a couple of brands that have been discontinued, so there will be that impact too. So all in all, these 2 stocks were in focus today. But Hemang Jani is still with us, so let's go straight to him. Hemang, on both these names, right? Tata Motors on the upside, Maruti, some concerns. Your thoughts, and which one would you add to your portfolio now?
So Sonia, in case of Tata Motor, apart from the business update which is out where the numbers are good, what we feel is that all the 3 businesses are in a recovery mode. And the India CV business will see a cyclical recovery. The PV business is seeing a structural recovery. And JLR also we are seeing a bit of a cyclical recovery. And now India business constitutes almost about 50% of the SOTP. So given that Tata Motor is quoting at a much lower, valuations of almost about 17 times and recovery across these business verticals, we do think that there is a case for, adding into this name in the portfolio, and we have a price target of 525. As far as Maruti is concerned, I think there are certain challenges, but when we look at the monthly numbers, the last month was one of the best months, and with slew of product launches and the kind of acceptance that they've received, we think that there is not much of a concern in terms of the overall growth. So any correction in Maruti definitely as a pure OEM play would be one of our high conviction buy.
Okay. Hemang, the other big theme today has been the city gas distribution companies, the Kirit Parikh recommendations. Now, stocks like IGL and MGL haven't moved too much today. Most of the re-rating and up move took place in the last couple of days. But today you've got MGL, which is just up less than 1%. IGL has recovered from the day's low at 1.5%, now up 1.3%. Do you think there is some steam left in IGL, MGL, and what's the way forward now?
So clearly our take is that, Rima, that the upstream companies like ONGC and Oil India are in a better position because of the way the entire pricing mechanism is going to work in their favor. So definitely we would have them as one of the top buys for the oil and gas sector. As far as CGDs are concerned, we think that IGL, would be at a disadvantage because of higher valuations and also the overall pricing, which they have capped at about $6.4 MMBTU, is slightly negative for them. So IGL is definitely, a stock that we would stay away from. But MGL and Gujarat Gas are the ones where we have a positive view. And we think that, even with this recommendations not being that favorable, because of better margins and better growth visibility, one can really buy, as a small allocation stocks.
Hemang, thank you very much for joining in. Mini bounce seen in the markets. The Nifty went down to levels of 17,600 and from there it's managed to push higher by about 23 points. Pashupati Advani of Global Foray is now with us on the show. Pashupati, the texture of the market feels a lot more different now, far more bullish and optimistic. And there were so many concerns in the markets. The FIs were selling, but now for the last 6 consecutive sessions, the FIs have bought in the market, covering their short position. Inflation may not be such a big concern given that RBI has gone ahead and paused. So at least they're not too worried on the inflation front. The global noise surrounding the banking turmoil has abated, at least for now, and valuations have corrected. Time correction is taking place. So in that sense, many of the headwinds that the investors were worried about India seem to have been put on the back burner or addressed. Where do you stand in the markets now? Are you comfortable buying at these levels?
See, we've got a wonderful situation in India that we are the flavor of the year in the sense of everybody's looking at India saying this is the only real big growth story left. And therefore, money has to be allocated to India. And we're seeing that, which is why, you're seeing a bit of money coming in. However, our markets is high compared to some of the other markets which have actually got trashed. Particularly when this banking crisis took place. So there is a little bit of wait and watch. But the reality is that the large stocks in India have done very well. The mid caps have done okay. I would say some of them have, actually come off quite a bit. And so, you really have to be, our market has always been a stock-specific market. And I think that's the way it always, will continue to remain. And I think one has to do one's homework and then decide.
All right. Hi, Mr. Advani. Good afternoon. Thanks so much for joining in. The banking space is something that you're saying that it's a consensus trade, but you'd rather not jump on. What's your view now on the banking stocks? One fear was that the NIMs will start getting compressed because the cost of deposits are going up. But have you changed your view, or will you still stay away from banks and you have better opportunities? Yes, sir.
See, the reality of the matter is that, the banks are a Goda which you could have written on all these months and made money. But one has to be nimble. So people are playing the Nifty. They're doing all sorts of options trading also on the Nifty. But the reality is that, I don't think the banking, as you said, the NIMs are going down, but they are continuing to make money. So far, there's no, the sort of loan losses are not going up. There was a whole lot that they'd taken about a year and a half back. There have been some restitutions through the NCLT, and therefore, some of the banks have got some money back. But the reality is that I personally feel that the banking crisis is not over. For example, a lot of startups, even Indian startups, had money caught in Silicon Valley Bank. Fortunately, that got bailed out. But there is some ripple effect happening in the US also. And it's not so easy to open an account anymore. You can't just walk in and say, I want to open a bank account. It's become a real headache in most parts of the world, including in India, for example. So, I think that it is wait and watch. And the good thing is that the rupee has stayed below 82, which is also good for India. And we're able to manage the oil prices well because we're getting cheap Russian oil. So between the two of those things, our markets are stable and it's all good. Nigel?
It's all good. I guess that's the best way to put it, right? Pashupati, hi, this is Sonia here. Good speaking to you after a while. But this is a market that's also tested the patience of a lot of retail investors, right? I mean, give and take everything, despite the move we've seen in the last fortnight, portfolios are bleeding, especially in the mid-cap and small-cap end. Do you think that there is a resumption of a bull market coming anytime soon, or at best, we are going to amble around these levels itself?
See, what I'm seeing is a big shift because banks are offering 6-7% even on FDs. So there has been a shift, and also government is getting people out of debt mutual funds by virtue of putting capital gains on tax on them. So the reality is that people are shifting money out of equities into fixed deposits, which is the way we were. People have forgotten, but 5-7 years ago, 90% of people's money savings were in FDs. Then rates came down and they shifted to the equity markets. Now they're shifting back. So I think that one has to be cognizant of somebody saying, okay, I'm quite happy to get 5% net of tax. And frankly, I think 2023, if you are positive and you're making more than 5% after tax, you're in a great place. And frankly, very few stocks look like they're going to give you that kind of return. So I am kind of cautious about the equity markets. And as you said, mid caps and small caps have got nicely hammered. And but there are obviously opportunities in that.
Which stocks, Pashupati, according to your sectors or theme, which can actually beat the FD returns this year? You said very few of them. Which ones would you bet on?
So again, I personally feel that there are some sectors that India needs. So anything to do with food distribution, logistics, even some specialty chemicals which have been doing well will continue to do well, even though they are highly priced. They're required. So anything that's required will have people buying into it slowly. And I think that you are seeing people looking at certain themes. Solar's gone quiet right now. So people are were looking at solar companies. Now they're not looking at them so much. But I think we're range bound. I think there are opportunities to be made within these ranges. But again, I don't think you're going to be I mean, this is probably the year to buy and write options against it to increase your yield. So that's the other thing that one could do as a strategy.
All right, Mr. Advani, what about the new age themes? I think you briefly indicated that Paytm, maybe it's come to a value point, and I think you were planning on nibbling in. Did you take a big bite?
So I took a bite.
Yeah.
I nibbled, and then it jumped. So now I'm thinking whether I should nibble more, because obviously a stock that looks like it's going up and you have conviction. I think it got hammered. I think what's happening with its parents overseas is also very positive for markets globally. And, I think it's a good place. The others, as I said, there was Paytm, there was Zomato, there was Nykaa, and there was the insurance one. And, Nykaa, I don't think is doing so well, and I think they're having competition coming into the space. Zomato seems to be a necessity in India, so I think that will survive. Zomato, Swiggy, of course, is private, but Zomato is public, so maybe that's also worth nibbling at some point. But today, I would say that Paytm is probably still at the top of the wish list in that space.
Yeah, absolutely. I mean, Zomato and Swiggy, it's pretty much a duopoly market, right? So there is definitely a lot more space to grow. And some of these companies are returning to profitability as well, like you said. So that perhaps a good space to look into. The other space I wanted to discuss with you is what's happening with this whole defense theme, right? I mean, every other defense company is getting an order, not just defense, railways as well. And some of these stocks have become 2x, 3x from what they were about a couple of years ago. Do you still have faith here, or is this a theme that is completely juiced out? The BELs of the world.
No, I've always been comfortable with this theme. The challenge is, you've seen just now in the gas pricing. You feel that the private gas companies, the quasi-private or the sort of government gas companies are doing well, and then all of a sudden the government puts a cap on how much money they can make. So I think that's the biggest fear. You allow a government company which is in defense to be effectively like a private sector company, and then you put a cap on it so that they can't really make the money that they deserve. So you're asking them to make infrastructure investment, and then later you're putting a cap on how much margin they can make. So somehow foreigners need to be given some kind of confidence that the rules are not going to change, and then the amount of buying you'll see into those kinds of companies, will be quite significant. But until that happens, we're in a bit of a fuzz because people are concerned that they're not going to be able to take the profit, make the profits that they think they deserve. Sonia.
Okay, Pashupati, we'll leave it there today. Thank you very much for joining in, so bringing in that voice of caution in our markets after the big up move that we had last week. Slip into a break, but as we do that, let's listen into what Tahir Badshah of Invesco Mutual Fund had to say about the current market action, the outlook for earnings and his sectoral bets.
There has been a one negative development from a global standpoint, which is around US, centered around US banks and the repercussions thereof. And then there is a good development over the weekend that, at least for some reason, the RBI has chosen to pause, and that takes away some bit of the multiple pressure on the market, pressure on multiples rather, on the market. I think we'll look forward to some interesting, outcomes of this season to be able to judge as to whether earnings can now hold up as we expect, or as the market expects. There is probably reason to believe that the worst is behind. We need to get into specifics of the Indian IT services companies, and we'll hear a lot more as the quarter goes by and we get the quarterly results. Industrials from the point of view of whether they're able to hold up and deliver to the promise.
Well, thanks a lot for that. Today was entirely a day of consolidation. Not too much action on the headline index. The Nifty consolidated with minor gains. The Bank Nifty, in fact, was under a bit of pressure, so it was down about 0.5%. IndusInd Bank, ICICI Bank, Axis Bank were a tad bit soft today. Nothing alarming. But on the upside, a lot of companies, after coming out with their Q4 business updates, surged in trade. Titan was up about 1%. Tata Motors was the star of the show, up about 5% after strong JLR numbers in Q4. L&T hit a fresh 52-week high today as well. Another pocket that suffered a bit today was FMCG. So you had Nestle, Britannia, HUL that were all under pressure. And the other sector, if you're looking at one, is technology. All eyes will be on names like TCS and Infosys that come out with numbers on the 12th and 13th of April. Going forward, and those stocks will definitely be in focus as well. But otherwise, it was a day of complete consolidation. The market just holding on to its gains of last week, ending around that 17,630 level.
The closing bell, and we are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, a quiet session with a positive bias, one would have to say. And the good part is that the mid-cap index continues to outperform. But Nimesh is with us on our special segment, D-Street Chatter. Nimesh, what are you picking up? Good long weekend behind us now.
And another long coming up.
Oh, lovely.
So that's the best part of it. Right? Yeah, the last so-called long weekend.
Yeah, and then after that we have 5 days.
Yeah.
But Nimesh, what about participation? How is it? I think in parts of Europe still participation will not be great because it's Easter Monday, so those markets will be shut. But otherwise, how are you reading the data points coming out today?
So that is impacting the flows for sure, because of the truncated and the fact that some global markets are shut. So the flows are slightly muted, and that's showing up in the volumes as well. But I guess, from a technical point of view, Nifty is now struggling to pass beyond 17,650. So that's a big level on the upside to watch out for. So that's something. But, in terms of flows, again, a mixed day pretty much. But I guess there is going to be there's a basket selling at a leading Friday. So that's impacting some of the financial names, not only banks, but some other non-NBFCs as well. So that's something which is playing out. I guess the sector to watch is clearly the real estate. For the last 2 days now, that's a big up move in many of the stocks, largely on the back of the pause by the RBI, and that's helping some bit of flows as well. So I believe, there is now money being chased in the real estate names, not only the large cap, but some mid cap real estate as well. So that's the overall feedback. I guess the big thing to watch will be the IT numbers this week, like TCS and Infosys both will report numbers, and that will set the tone for the earnings season and for the IT sector. So that's something to watch. But largely a quiet day, so to speak. But again, Nifty is struggling to cross 17,650 on the upside.
Well, I was wondering why the banks are underperforming, and as you said, there is some outflows that we like to see towards the end of close. Got that. What about individual stocks? What are you looking at?
So in terms of individual names, the first stock on my list is DLF, like part of the whole real estate basket. But largely DLF is buzzing on the back of strong buy flows. So some bit of buying traction is back in the real estate names, and DLF stands out in terms of flows today. So that's the first one. The second stock is Bandhan Bank. Marginally under pressure. It's actually been quiet. But the selling pressure continues in Bandhan Bank for the last many days, and that's been the trend today as well. But there was a Goldman Sachs upgrade today on Bandhan Bank, so they upgrade the stock to buy now from neutral and their target price around 270. But the selling continues in Bandhan Bank. That's the feedback. The third stock is Titan. Again, came out with strong Q4, which was better than what the street was expecting. And also there is buying flows at a leading FI desk in Titan. So at these levels, some bit of accumulation is happening in Titan for sure from larger FI. So that's the third one. And the last stock is Ambuja Cement. That's been one stock which is quietly moving up in the cement pack, good volumes as well. And I believe one of the leading long-only fund is an active buyer in Ambuja Cement. Hence, I would have up move in that stock as well.
Okay, thanks a lot for that. So a lot of real estate stocks buzzing. DLF is up 6%. So that's the beauty of the stock market, right? If you can't afford a DLF flat worth 7 crores, at least you can buy the stock. It's much cheaper than that and own a bit of the company. Well, Mitesh Thakkar joins in to tell us what to buy or sell for a reverse trade tomorrow. Mitesh, before I ask you about your own views, DLF at 400 rupees, is the risk reward still favorable for traders?
DLF, I think today was the top call in the morning, and I think the overall setup is very, very positive. Now, if you look at the monthly or the long-term charts here, in the month of September 21, we got a closing high of 410, and then 403 was the closing high in November 22, and the intra-month high was around 409.5. So this 410, 415 zone, I think is what can possibly stall the up move for a couple of days, but my sense is that the way these long-term charts are shaping up, it should clear that, and once it does that, the stock should fly at least to about levels of 500. So I have about 25% upside from here in positional point of view. In the short term, traders might want to take profit around 410, 412 levels, but I think eventually it will go much higher. So in the next 3 months, this should be one of the top bets.
Okay. What about other recommendations? Any BTST calls?
I have two names on the buying side. We're trading clearly with long buys, despite the fact that today the market is slightly subdued. So BEL, I think, can be a BTST trade with a stop below 99, targets of 102 on the upside. And the other one which I like is Canfin Home Finance. That's a BTST with a stop at 576 for targets of 590.
Thank you very much for that. Let's get to the other big story that we've been highlighting through the day. The government has accepted the suggestions of the Kirit Parikh panel on gas pricing. Sonal is here with all the details. Sonal.
Well, yes, this has come as a material relief to the gas users as the government has accepted Kirit Parikh committee recommendations and has amended as to why gas is and how gas is priced in the country. So let's understand some basics first. India consumes around 150 to 160 MMSCMD of gas totally, out of which 50% or 80 MMSCMD is produced in the country and rest is imported. Out of this, 77 to 78% is the gas under APM or administered price mechanism, and rest is non-APM. Out of the total production, 83% is produced by ONGC and Oil India combined, and rest is basically private players or JVs. So the change that has come about is in the APM gas pricing. Let's first talk about what was the gas pricing scenario earlier. APM gas prices, they were basically decided on basis of a formula, which is the weighted average price of 4 global benchmarks, that is US Henry Hub, Canada-based Alberta gas, the UK-based NBP and Russian gas. It was revised every 6 months and it was set at $8.57 per MMBTU as per the last revision. Now there has been a change to that. Gas prices will now be announced every 1 month. The prices will be pegged at 10% of international price of Indian crude basket, and to protect the interest of consumers, there is a ceiling to this. The gas prices, that is $6.50 per MMBTU, and the floor is at $4 per MMBTU, which is for the benefit of producers. Now it's important to note that ceiling will be maintained for FY24 and FY25, post which this will see an addition of $0.25 per MMBTU every year. Gas from non-nomination blocks of oil and ONGC will have 20% premium to APM prices, and there is no change in pricing regime for difficult fields or any LP blocks. Now this change was brought about because of the way gas prices moved during the Russia-Ukraine war, as the global supply of gas was impacted. This led to prices in Europe going up by 3 times, prices in the US touching new highs of $9 per MMBTU. This led to higher prices in India as well. And that is the reason why CNG prices in our own country and city shot up by 80%. So that is the kind of move that we saw in 2022 as well. Now let's move on. After talking about how CNG and PNG prices went up, that was the reason why the government went ahead and set up the Kirit Parikh committee.
But with the new pricing regime change that has come in from here, we will see that the prices have been set at $9.16, that is April 1st to 7th. Post that it is at $7.92 per MMBTU. But again, the ceiling is at $6.50 per MMBTU. This has come in as a big relief to city gas distribution companies. IGL gets around 80% volumes from CNG and PNG segment, MGL at 87%, and Gujarat Gas at 36%. So the first two tend to benefit the most. As a result of all this, there have been massive price cuts by all the players. MGL has cut CNG prices by 8 rupees, PNG by 5 rupees. We have seen Adani Total Gas cutting CNG prices by 8 rupees, PNG prices by 5 rupees. There's IGL which has cut prices by 6 rupees. GAIL Gas has cut prices by 6 to 7 rupees per kg, and this has come as a relief to consumers as well. But for producers like ONGC and Oil India, in the near term, there will be a hit to their realizations, with both of them seeing cuts of around 24% as per brokerages. But of course, in the longer term, it's a positive because of the floor. Brokerages are positive on the entire city gas distribution space. Jefferies has upgraded the EBITDA estimates by 6 to 20% for all the three companies. For GAIL, it will lead to a savings of 1100 crore rupees for LPG segment due to lower gas costs. Morgan Stanley says that not only city gas distribution companies, new pricing mechanism is a positive for producers as well and removes a multi-decade overhang on long-term returns. And CLSA says despite the price cuts, margins will be positive for MGL and IGL, and this takes discount of CNG versus diesel back to 30% and brings back the pricing power. Government's intent to assure $75 to $80 barrel realization also raises earnings predictability for ONGC and Oil India.
Thanks a lot for that, Sonal. Well, let's stick with the theme, but let's focus on a couple of stocks that are gaining on the back of this news. Everest Kanto is a stock that's up and about in today's trading session on very, very large volumes. The read-through is that, if CNG cars are going to be sold more and they have a direct exposure out there, then their business could do well. That's Everest Kanto is what I'm talking about. Mayuresh Joshi, Head Equity Research at William O'Neill, joins us on the show. Mayuresh, I'm not sure whether you tracked this one, but the street clearly believes that, there is something in it for this company. In the past, though, the promoter entity has disappointed quite a few times. Your view on the stock?
Afternoon, Nigel. Not an active coverage, but I do track it personally. So I think in that context, with the entire perspective on what Sonal just mentioned on the gas pricing ecosystem in India itself, EKC, Everest Kanto, I think is very well positioned to probably capture that entire demand. I think the entire CNG ecosystem demand in terms of more vehicles expected on road in the next few years, transition happening both from a BS6 perspective, as well various government initiative, including scrappage taken into account. The expectation is that from 3.5 odd million, almost 3 times over the next 5 to 6 years. Having said that, the kind of capacity plans that EKC have, the latest release does indicate that they probably want to expand their capacity on an overall basis from 0.9 million units to almost 1.8 million units to suffice the gas requirements itself. And that is probably getting exhibited through their financials as well. So the revenue that they posted of almost 1,700 odd crores in the past financial year, with a reasonable amount of margins on the consolidated basis, and even a pre-ROC or even the post-tax ROC levels of almost 36, 37 odd percent is a very encouraging sign. So I think with all these elements taken into place, the expectations in terms of more consumption expected to drive cylinder volume growth, both on the car side, the industrial usage side, and now getting into the hydrogen part of the business, which is expected to grow exponentially in the next few years. So will the momentum continue? Possibly, yes, with all the triggers and tailwinds.
Okay, Mayuresh, hi, welcome to the show. It's very quiet for the market today, but are there 4 or 5 stocks that you're looking to buy now after the kind of, of course, in the last 1 or 2 weeks, the market has risen, but in general, post the dip that we've seen in the last 6 months, anything that you're picking up?
Afternoon, Sonia. So capital goods has always been on our radar for 2 reasons. One, the entire perspective in terms of how earnings will play out significantly better for the entire space as a whole. So I think capital goods as a space can continue doing well. We've already seen testimony in the form of better orders coming through. The companies are executing well across the value chain, and therefore the margin performance of most companies within the spaces should hold out in the next few quarters as well. And with that, I think significant operating leverage will probably mean that better ROEs and ROCs along with ROICs, because the kind of capex that they're putting in, every incremental capex is expected to probably earn a lot more in terms of EBITDA over the next few years as more and more orders fall into their kitty with an election year coming through. So stocks like L&T, ABB, Siemens from this space obviously stay on our radar. As an extension to this space, Sonia, infrastructure also remains a big hot theme in terms of how earnings are expected to play out. And a few of the companies that I mentioned a few weeks consistently on your show have been companies like Nagarjuna Construction. If they do correct some bid from these levels, I think they will have a reasonable amount of entry point. Very good order intake that they have, very good revenue visibility with the order book in excess of 50,000 crores. Margins expected to remain above that 10-11% band, and execution is expected to remain extremely satisfying as per the management in the next few quarters, which means that operating leverage will play out for companies like NCC, VATech, Wabak as well, which is one of significantly huge order. Working capital trays have come down to 90 odd, and therefore this space remains on focus as well. The third space will obviously, from an earnings perspective, also be some of these power utilities and a few of these cement players as well. Quarter on quarter, cement companies should report significantly better numbers with medium coke prices coming down significantly and freight costs remaining in the range. And therefore, the EBITDA per ton should show some signs of improvement. Whether there will be significant capacity additions with all the Adani turmoil that we probably see might be just on the back foot at this point of time. Companies are trying to push through volumes to dealers at this juncture to probably gain market share. But to a large extent, I think the EBITDA performance for most cement players should be good. Ultratech probably remains on our focus list.
Do stay on. Need to slip into a very short break, Mayuresh. But as we do that, let's also listen in to some market opinion that we got from Venu Gopal Gare of Bernstein.
If you were to see the last 18 to 20 months, India has been broadly flatlining, pretty much in a range-bound sort of a market. And in some way down the line, you can call it a bearish sort of a market, even from a global perspective. And you tend to see bear market rallies from time to time, these sort of rebounds and then, sell-offs, which is quite common if you look at the past 18 months as well. Normally, we tend to ignore, quite a few of these bear market rallies if they're pure valuation-led. I guess the reason why we decided to call a rebound this time was largely because it was not just pure valuations. I guess our perspective was more led by the fact that we were also seeing macro bottom out. Our thinking primarily is that real estate is still early cycle now, which primarily means our old school thought process that this is like 7-8 years of downturn, post which we've seen 1 year of upturn. Given that we're still off the bottom, affordability has increased, and of course, volumes in real estate would have mopped up some bit of inventory over the last 12 to 18 months. You'd start to see a new cycle or a new start cycle commence, which is where construction starts, which is where cement is going to be that early cycle play when you start to see real estate construction increase or improve in terms of volume. So both are linked to each other in some way. And that's the reason why, this was a part and parcel of the call apart from financials, which we were highlighting as a way to play this rebound. From an IT point of view, I'll probably argue that one has to take this call that are we moving into a material hard landing globally, or is it a recession? It's very hard to give this gung-ho buy everything in IT call. Remember, they're not like at the bottom of the valuations as well, right? So that disconnect still remains. I think Europe in general will remain troubled as a geography for a longer period of time. So one can't really take a call today on whether one should be playing Europe. But if you look at two areas within the overall export basket, one is services and the second part is manufactured goods. The reality is that manufactured goods have also seen some form of inventory corrections over the last 8 months, which is the risk aversion which has happened globally. At this juncture, we are mildly overweight services, which is ID services. We have some positions in terms of, buy ideas within the manufactured goods and autos. For example, don't want to mention the name, but the largest two-wheeler auto sort of exporter from India, we have an overweight call on them, primarily on the expectation that probably exports are bottomed out there. So it's a sort of a muddled but a mixed view out there.
The markets, the Nifty is likely to hold above 17,600 by the close of trade, but it has come off sharply from the day's high, which was nearer to that 17,700 mark. Mayuresh, you spoke about many of the sectors that you like. Power, utilities is one, few of the capital goods names. What about real estate? The numbers have been blockbuster. A couple of weeks back, it was DLF and the luxury housing sales. Today, you've got numbers from Godrej Properties, best ever, on track to hit more than 12,000 crore of sales. Shobha Developers numbers also look pretty good so far, the Q4 updates. You're not convinced about the real estate momentum?
So to a certain extent, Rima, I think the updates have been pleasantly very good. If you look at Godrej's update as well, the kind of cash from operations or cash collections almost at 9,000 odd crores, the outlook that they've probably given 32,000 odd crores in terms of more launches expected and 10 million delivered in the last financial year. I think that emanates a lot of confidence in terms of a lot of cities that they operate out of in spite of the rising interest rate scenario. Same with Sobha to a large extent. Best quarterly performance as far as sales is concerned. The realization per square feet has been maintained quite well as well. And therefore, I think the demand that probably comes out for South-based real estate players, how the IT sector will probably hold up is a great driver for demand. So I think how the IT sector will perform over the next few quarters will determine the few trends in terms of South India real estate. But yes, selectively, I think some properties like DLF, which got sold out in a couple of days, have been outliers in the market. There are a few tax changes coming in as well for high-end real estate properties as well. But I think with the kind of momentum that Godrej has probably exhibited, probably a few momentum in a few stocks like Godrej can very well continue. But if this trend is to continue, Rima, I think a few of these ancillaries can also do well. So on our watch list again are a few ancillaries like KEI, which also becomes a proxy to these real estate players. Volume growth expected to be reasonable as per management. Input costs have started coming off, which means margins should get maintained for the company in the coming financial year. And a reasonable amount of orders on hand means that margin performance along with operating leverage should get.
Okay, well, we're just counting down to close, and it has been a very quiet day of consolidation for the market. The Nifty will go home with minor gains, not too much. But the Bank Nifty is the one that's under pressure. Mayuresh, the big Q, of course, as we move into the next couple of days will be the IT earnings. TCS on 12th, Infosys on 13th, and then, followed by the whole array of stocks in the IT space. Anything that you're looking to buy if, suppose there is a further dip or there is some weakness in earnings or FY24 guidance, anything that you look to lap up?
So on the O'Neill lens, Sonia, I think clearly out of the large cap names, HCL Tech surprisingly is holding up close to its pivot levels as we track it. I think 1150 becomes a very, very important pivot for HCL Tech. Again, the expectation largely is, as Rima carried out a beautiful piece, the top line growth in constant currency terms might be a little bit subdued for their exposures in BFSI, retail, manufacturing for the industry and HCL Tech in general as well. But generally, I think margin expansion should hold the key for a lot of companies within the segment as well. So I think within the large caps, HCL Tech is something which is very, very close to the pivot on the O'Neill lens. Within the mid-cap universe, I think the two outperformers, KPIT and Sonata, have done exceedingly well. But again, they are late-stage bases on the O'Neill lens. So we expect that if they correct a little bit more or a little bit more even from the current levels, I think valuations will become a little bit more sanguine and therefore entry points will become far more reasonable. So I think we'll wait for dips on mid-cap IT. HCL Tech probably is holding out on this pivot.
Mayuresh, thank you very much for joining in today. It's Wipro, which is having a pretty good up move, 2% higher now on Wipro. And Wipro, remember, has been the rank underperformer in the large cap IT pack, down 35% in the last 1 year. But thank you very much, Mayuresh, for joining in. Just counting down to the market close in the last few ticks. The Nifty is holding above 17,600 with a gain, but a very minor gain, just up close to about 0.1%. Turned out to be a bit choppy, started off quiet, then there was a rally. The Nifty went to levels of 17,700. From there was a sharp decline from about 12:30 to 2 o'clock, 2:30, and the Nifty came down to levels of 17,600. But by the close of trade, it appears that we're going to go home with some green on the screen. Tata Motors is the top Nifty gainer, 5.5% higher. Very strong JLR update. Free cash flow numbers looking good. Goldman upgrades it, so that's been one of the big movers. But the other auto names like Hero MotoCorp, M&M giving it company on the way up. IT broadly had a good session led by Wipro up 2%, but others like TCS and Tech Mahindra also seeing a rally of more than 1%. ONGC was a big mover. ONGC was up close to about 4%. Other notable gainers include Adani Enterprises, UPL, Adani Ports, Power Grid, L&T, all higher in trade. On the losing side, Banks were the big sectoral underperformers today. The Nifty Bank down 250 points, 0.6% lower. So banks dragging the overall market lower. But this comes on the back of 6 days of gains. So there was that bit of profit taking. Bajaj Finance, IndusInd Bank, ICICI Bank, Axis Bank, HDFC Bank, all trading lower. Add SBI to that list as well, which saw a sharp late sell-off. HUL, Asian Paints, Tata Consumer, Britannia, so consumption names also a bit subdued, and Reliance Industries. That was another big drag.
Oh, absolutely. So overall, nothing much really, right? I mean, an absolutely quiet day of trade, just marking time around these levels. And if you look at it, consolidation was the name of the game today. So even in the broader markets, I mean, not too many moves. Everest Canto, of course, was up almost about 15% on the back of the fall that we've seen in CNG prices. But apart from that, not too many movers. Yes, real estate had a big move. So whether it was DLF, there was Godrej Properties, there was Soba, good numbers coming in from Godrej and Soba as well. So looking pretty good over there. Some of these new age tech companies have been moving well. So something like a Zomato was up 3.5%. Today, Ashok Leyland gained almost about 1.5%. Defense has been doing exceptionally well. BEL, BHEL all looking pretty good. Something like a Federal Bank as well inching up higher. On the downside, names like Reliance Power, Nykaa was under a bit of pressure, and IDFC Bank as well, not looking too good. But let's wind down the day's trading action. It's a wrap on NSE closing bell, but don't go anywhere. We have Smart Money coming up in just a bit, where I'll be taking you through innovation in investing, which is the big theme that we're expecting to see in 2023.